500 families across 17 countries achieved their wealth creation goal, rupees 1,400 crores through us. As per the Retirement Readiness Survey of 2020, 57% of Indians cite managing the cost of living as their main concern for retirement, while another 50% worry they won't get support from their family in future. To address this important aspect of one's life, we have with us Mr. Amer Godse, a globetrotter, a fitness freak who has over 16 years of experience in the financial services industry and currently heads the growth vertical at AD Nayak Wealth. Over to you, Amer.
Thank you, Diksha. Thanks for that introduction. Certainly a fitness freak and globetrotter, I would say. I think so many of you must have seen my earlier presentation where, I have shared my journey in terms of how I have pursued the passion of traveling. If not, please feel free to get in touch with me. I'm more than happy to do that or share those things once again. I love to talk about it. So let's get on with today's agenda. I'm sure like many of you are waiting for Sanjeev Gokhale sir. But before that, I just want to quickly share, why retirement is important. I'll just start off with a brief introduction about Nike Wealth, actually. As many of you who have already our clients must be knowing about our group, AD Nike Group. But just quick introduction for those who are attending us for the first time. So we are, first of all, saying thank you. Thank you for coming today. Right now, there are more than 70, 80 people who are attending this webinar. So thank you to all of you for joining in. Thank you to all our investors who are supporting us for last 33 years, more than 33 years. And this is our entire team. This big thank you is from the entire team. This was the image which we had clicked for our last year's Diwali party. And so thank you to all of you. As I said that we all are in existence for last 33 years. I would like to highlight a very important fact that, today we are managing a wealth of 2,300 crore. And the most important part, as Diksha also briefly touched upon it, that out of that 1,400 crore is an appreciation. It is the corpus which, or the investment amount which all of you have given us to manage is 900 crore, and which is today has become 2,300 crore. So 1,400 crore out of this is an appreciation. And thanks to you, without your support, this wouldn't have been possible. Our entire family of Nike group is approximately 3,980 people. And this is like the most valuable thing to us, or most dear thing to us is for us. We are currently, our clients are present in 10 different locations across the globe, as we have mentioned on the map over here. And in the past, in financial year 2015 and 2017, we got these awards from CNBC TV18 for the best performing financial advisor. This is my profile, which again, 17 years plus experience. My aim in our life is to meet investors' goals and through prudent financial management. These are my team leaders. We have a 26-member sales team, and these are three team leaders. Many of you must be in direct contact with Vinod Mane, Kirtida, Vijay. So this is a quick, brief intro about us. Let's get on with our today's presentation. I'll just stop share. I'll just move to the main slide. 1 second. Diksha, I hope you can hear me. I think so there is some issue.
Yeah, you are audible.
Yeah, no, 1 second. In every presentation, there has to be a glitch. So I hope now you can see the screen, Diksha?
Yes, Amer.
Okay, so let's get on with today's quick discussion about retirement planning, and why we feel that all of you should be planning for your retirement. So for that, I will start off with a concept of circle of life. Now, circle of life is a concept which is applicable to all of us in our life. We can't avoid this. It is applicable to everybody, like from whichever background we have come from, to whether we are rich, poor, from middle class family, whatever. The circle of life is applicable to all of us. Now, as we all know that, roughly I have considered over here that all of us live life till the age of 80. So 80 is our typical life expectancy in today's term. And if we see this 80 years period, if I have to convert it into a months, then simply I will multiply 80 by 12 months, which will give me 960 months. Now, just for simplicity, I am rounding it off to 1000 months. So we all live a life of 1000 months precisely. Okay. So of course, few months more and less depending upon the circumstances. But if you look at the first 20 years of everybody's life, then typically this is what happens is the first 20 years are called as formative years of our life. We spent that going to school, learning a trade skill, hanging around with our friends. So that is how we predominantly spend our first 20 years. uh, if you look at next 20 years, that is age of 20 to 40, then typically what happens is from that period we take up job, we buy a car, probably even buy a house, get married, extend our families, we have kids. So that is the next 20 years part of our life. Okay, now if we move even further, then this is the progression that happens, is that we spent these years 40 to 60 thinking of buying a second house, sometimes a vacation home, getting ready for our kids marriage now, probably starting a business, uh, and then we retire at the age of 60, and we all live till the age of 80. Now, just before we get on, I just want to ask you, and you can share this in the chat box. Do you all agree with this circle of life concept? Please share it on chat box. I will be able to see it. Yes, so I can actually see nowadays people have actually evolved into a different group rather than going for a chat box. They are sending these emojis. So great. So everybody's agreeing to this thing. Now, let me tell you that if you observe this circle very carefully, the first quadrant, which is the quadrant from 0 to 20 and 60 to 80, are the years where practically you don't generate any income, right? So there is no income for the first quadrant, which is 0 to 20, because our education and everything is taking place. At the same time, when you retire at the age of 60, 60 to 80, again, there is no income typically. So if you observe, and now if I convert this into a math, half of your life, technically you don't generate any income. 50% of your life, that is 40 years of your life, you don't generate income. Let's convert this into the months. Out of 1000 months which we all of us have, 480 months are only there to achieve all our dreams of our kids, our parents, our own dreams. Whatever dreams we have just 480 months to achieve it. To put it in a different sense, you have only 480 salaries to come. My age currently is 40. So for me, there are only 240 salaries remaining for me before I retire. And if we look at this concept in from that angle, then we all will feel that how retirement is a priority. Because if you see the bottom quadrant of this slide, apart from retirement, all other list of priorities are there. Probably retirement comes last on our list of priorities. And that is what I actually want to draw your attention to. in this presentation today. Let's move on to a different kind of example where look at this tree. I mean, amazing tree, great greenery. I mean, amazing greenery outside. Now, let's imagine this tree is there in your life. Now, I'm sure that finding this kind of tree in Mumbai is difficult. Max to max, those who are from Mumbai, RA Colony is a place where we can get this today. That is also under some bit of uh, concern. But let's consider that in your younger age, when you used to go to village, we used to find such trees. And if you look at this tree, what happens is that why this tree is so stronger. The tree grows depending upon how strong its roots are, and these roots are the ones which decide how strong the tree will grow. So basically, as the roots become stronger and stronger, the tree becomes stronger and taller. What if I chop this tree down? The roots will allow the tree to grow back. So roots is everything for a tree. Okay. So, but what if in this situation I remove the roots only of the tree? If I cut the roots, then the strongest of the tree will eventually fall, and that's the same thing with our life. And I'll show you that if you look at you as a whole, then you are a tree. You are a great massive tree, and the roots are getting nutrients from the income what you generate. The better income somebody generates, the stronger your roots go. That is how the philosophy of life is. What happens, unfortunately, in our life is that as soon as we retire, our income instantly stops, and that's the problem. Most people forget to plan for that. And if and as soon as we retire and our income stops, then what will happen? The strongest of the tree will also fall down, and that is the reason why we all need retirement planning. So my sincere request to all of you is that if any of you have not still started for retirement, this is the best time. Please start the retirement. And today I'm actually going to give you a budget rule also. So to ensure the roots of our trees to stay stronger even after the retirement, we all should have this budget rule in our life. Now, ensure that you spend 50% of your income to your needs. So, what are your needs? Your groceries, household expenses, paying for school and college fees of your children. So, all that should go into the 50% of your income. 30% of your income should be spent on your wants. Now, each one of us have wants, planning to buy a new house, a new car, vacation. All those things can be done into the 30% of your income. Now, what we are left off with the 20% of the balance income, and the 20% of your income should be parked towards your retirement. So always remember, if you cut the roots, no matter how strong the tree is, you're bound to fall. But if you follow this budget rule, then I'm sure that the roots will continue to get stronger. And even after retirement, you don't have to worry ever for tree falling down. It will actually continue to grow for your next generations also. So with this, thank you. I don't want to take any more time from all of you. We have lots of tools, and we'll have a Q&A probably after Sanjeev sir's session. And we would love to talk about retirement planning also. So thank you everybody for listening to me. Over to you, Diksha.
Thank you, Amay, for the insightful session. You made the concept of retirement so simple and easy to understand. My key takeaways from the concept were the circle of life, and I always keep in mind that no matter how strong a tree, if you cut the roots, the tree is bound to fall. So thank you for those insightful sessions. And may I now request my colleague, Alvina, to flash the first poll, please. So I want to ask all the participants now that how many of you have started planning for your retirement? Request
There
you
is
to
a
please
poll
select
available.
the
Yeah,
yes.
there is a
Request you to
poll
please
available.
select the option in the poll, and we'll close the poll in the next 10 seconds. Okay, next 5 seconds, and we'll close the poll. All right, now moving on to the next question. Okay, so the next question for you all participants today is that do you have the idea about the amount you should be saving for your retirement? Do you know the amount you need for your retirement? Okay, we'll close the poll in next 10 seconds.
Diksha, you can share the result with everybody. They will be able to see that, how everybody voted.
Sure. All right, last 5 seconds. Okay, I'll just now quickly share the results.
So it is 50-50 almost.
Yes.
So it's good. So we have actually lots of tools which we, for those who doesn't know what is the amount they need for their retirement, we have tools to find out that. Please get in touch with your growth managers or get in touch with us. We are more than happy to help you.
All right. Thank you, everybody, for taking the polls. And thank you, Amay. Now, moving on with the session, I would like to just give you a reminder regarding the question and answers that we will be taking the questions and answers, and I would urge all of you to post it in the question and answer box. The budget 2023 announced that individuals will not have to pay any tax if the taxable income does not exceed rupees 7 lakh in a financial year in the new tax regime. Moreover, the standard deduction of rupees 50,000 has been extended to the salaried individuals, pensioners, and family pensioners under the new tax regime. The question that is now lurking in the minds of many investors is, which of the two regimes is good for me? And to address this very important question, we have with us CA Sanjeev Gokhale. Gokhale sir has over 32 years of experience as a practicing chartered accountant. He has appeared countless times on ABP माझा, Doordarshan, and All India Radio. He also writes articles on taxation in Maharashtra Times and is a visiting faculty at Vasai College in Mulund since the last 20 years. He is a cost accountant who has secured All India 15th rank at the final exams. Gokhale sir, over to you.
Thank you. First of all, thank you, all of you. Am I audible, visible?
Yes, sir. You're audible and visible, both.
Thank you. Thank you, Nikhil Naik team, for giving me an opportunity to talk on this subject. Before the budget, everyone was curious about how the budget will be. And more people were having the concern about the capital gain tax. Typically, we had sessions, pre-budget sessions on televisions, and my only answer was that make the new tax regime attractive. Coincidentally, that what I just discussed few hours before our budget, that came true, and our finance minister, Mrs. Nirmala Sitharaman, did the same thing. She made this new tax regime so attractive. Now, of course, creating some confusion initially, but with the figures and with the proper finance bill now, everything is now very crystal clear, and that I want you to understand it in a proper manner. To understand this new tax regime, which is now revised with this budget, first we have to go a little back. For so many years, since 1961 when the law came, we had only one tax regime. That is what normally popularly now known as old tax regime, where we had only 3 rates of tax. as of now, even now also. Up to 2,50,000, no tax, tax-free income. 250 to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%. And about 10 lakhs, 30%. Only three rates. The rates were on a little higher side as compared to the new tax regime, what is now even revised. Even before, I would say in 1997, prior to that, the rates were as high as 60%, 50%. And therefore, after globalization, we found that the rates have gone down substantially, but still they are on a higher side as far as the old tax regime is concerned. In 2021, Madam Speaker, Finance Minister gave us an option to switch to a new tax regime. Of course, what that new tax regime was before this budget was not that attractive. I give an example for that. Let us assume that under old tax regime, I was liable to pay 100 rupees tax. She said, okay, now in the new tax regime, I am reducing your rates. Now pay 80 rupees of tax. All of you may be aware, 2021, the new tax regime was having 6 different slabs. Up to 5 lakhs, both the regimes were having similar taxation. 2,50,000 to 5 lakhs, 5% in both the regimes. Before this budget, of course. But from 5 lakh to 15 lakhs, 5 to 7.5, 7.5 to 10 lakhs, 10 to 12.5 lakhs, and 12.5 lakhs to 15 lakhs and beyond 15 lakhs. So 6 different slabs were given. As compared to old regime, this slab, 6 slabs, considering 6 slabs, the rate of tax was definitely lesser. So if one takes into account purely on the basis of the new 2 different rates, then the new regime was attractive. But taxpayers thereafter found that if they remain in the old regime and put some money in the tax saving avenues, their tax was actually lesser than even under the new regime. In my earlier example, 100 rupees was my tax in old regime. Then the finance minister offered it 80 rupees under new regime. But if I make tax saving investments, my tax in my old regime would go down by 40 rupees and I should have paid only 60. So my 100 becomes 60 in old regime. Why should I pay 80? So the same thing happened in last 2 years. Almost 90% return filed by me, where people were preferring, the taxpayers were preferring old regime because they invested due to their habit of investing in last so many years in a tax saving avenues. They had a long-term contracts like life insurance. They had a home loan where they used to get the benefit over a period of time. And more especially, as I told you, by putting these amounts, the tax under old regime was much lesser than what the reduced tax in the new regime. What is the result? The result was that new regime was not accepted. It was not popular. And that is what I remember I told pre-budget that if at all you want to go for this new regime, it has to be made popular, attractive by reducing, changing the slab, reducing the rates. And the same thing now, what Nirmala Sitharaman has done. The new regime is now, I would say, revised in such a manner where we find that whatever tax you would have paid by putting money in a tax saving avenues under old regime, you are now to pay equal amount of tax, lesser tax with this revised new regime. In my earlier example, earlier out of 100, by putting tax saving investments, money in a tax saving investment, we were paying 60 rupees tax. Now, new regime, which is now revised, say, okay, you pay 60, same tax, don't put any money in anywhere, no exemption, no deduction. You did not have to save money at all, but still pay 60 rupees. Now, one may think that if I am not to make any investment and still pay the same tax as what would have paid in the old regime, then everyone will switch to the new regime. Because saving is now not required in the new regime for saving the tax. It is already saved. The product is made in such a manner that the tax under new regime is exactly the same as what you would have paid after putting money in a tax saving avenues and remaining in the old regime. I give an example. The example is given by Nirmala ji in her budget speech itself. She said that a person earning 15,50,000 per annum will have to pay only 1,50,000 as a tax in the new regime. But suppose he remains in the old regime because the option is given to him, he will have to pay 2,62,500 tax. Under old regime, even if a person puts 3,75,000 in the tax saving avenues, then he will be paying 1,50,000. To sum up, my old regime, my income was 15,50,000. 50,000 is my standard deduction. If I am salaried, income will be 15 lakhs. If I put 3,75,000 in different tax avenues, tax saving avenues, my income will go down. Taxable income will go down under old regime, and my tax liability will be 1,50,000. But if just by accepting a new regime, of course, now there is no question of accepting, it will become a default regime. Just saying yes to the new regime, I will be still paying 1,50,000 without actually putting any money anywhere. And therefore, the new regime may be preferred by those who are not in a position to save money due to any reason. But I have found many of my clients, they are saving the money over a period of time, either by a habit or as a part of their retirement planning, as Amey just said. And therefore, now we have to come to the conclusion as to what we should do, because that is what the mute question for everyone, what I should do. For that, we have made some simple formula, very simple understanding, simple formula. As far as new tax regime is concerned, there is one good change as compared to the old one. Old one means before revision. That in earlier scheme, up to 5 lakhs rupees, if you have an income, there was no tax in both the regimes. However, in this budget, we find that if you have an income up to 7 lakh rupees, and if you accept the new regime, you are not liable to pay any tax. So if my income is 7 lakh or lesser, I need not have to pay any tax if I accept the new regime. So indirectly, one can say that those who are having income up to 7 lakh can safely consider new regime as their regime because they are not to pay any tax. By chance, suppose they have a choice of continuing with their old regime and still don't want to pay tax, they will have to invest 2 lakhs rupees because 7 lakhs minus 2 lakhs, their income will be 5 lakhs, and then 5 lakhs under old regime has no tax even today. So up to 7 lakh, the matter is very clear. Then from 7 lakh to 15 lakh, this is various slabs are there, and what will happen? What we have noted that for 15 lakhs, the 3,75,000 is such an amount that if you are investing more than 3,75,000, then old regime will be suitable to you. But I have seen many of my clients how their investment pattern is. Typically, I give an example: 1,50,000 for section ATC for PPF, LIC, and all that. 25,000 for ETD, that is medical insurance. So 150 plus 25, 175. And those who are having housing loan, they invest 2 lakh. They get 2 lakh benefit of their interest. So that comes to 375. Now, let us say I am that taxpayer earning 15 lakhs, something more than that. And my investments are such that I am enjoying all this 375. That means putting 150 in ATC, 25,000 in medical insurance, 2 lakhs is my interest on housing loan. So my total tax saving investment is 375. For me, any system will have same tax, whether new or old, because 375 if I invest and go for an old system, my tax is 1,50,000. If I go for a new system, without, of course, the new system won't ask me whether I've invested or not. Still, the tax is 1,50,000. So as far as 15 lakhs and beyond, 375 is a cutoff point where I should check whether my investments are that much or not. Let us say I don't have any housing loan. Then what other avenues are there? Like NPS deduction under section ATCCD, 1B is 50,000 additional. So 150 ATC, 25,000 ATD, that is medical insurance, 175 plus 50,000. It is how much? Just 2,25,000. And if I'm having a 15 lakh income, my investments are below that 375 break-even point, and therefore new system will be more suitable for me. So those who are having income up to 15 lakhs or thereafter, any amount thereafter, just check whether your tax saving investments are at least 375. If they are beyond 375, is it possible beyond 375? Yes, why not? If you have an educational loan, the interest is allowed as deduction. If you are house rent allowance, yes, that will be of course not allowed under new system. Old system will allow you. In other words, if you are donating money for some institution out of your wish, you are entitled for a deduction. So there is a long list. 70 deductions are there in the old system. If you wish to take those deductions, where the amount exceeds 3,75,000, definitely go for the new, old system. But otherwise, if you are not investing that much or not putting in a tax saving avenues, 375 or more, new system will definitely save you more tax. This is the first point. Second point, for 10 lakh, the almost those who are having 10 lakhs income, for them, at least they should invest 2.5 lakhs. That is 150 plus 50. For if you have senior citizen, then 50, 80 TTB from bank interest, etc. So just check from your last year's return how much deductions you have taken. It should be at least 2,50,000. So roughly, I would say, of course, individual case by case, the small amount here and there will change. But we have a bracket between 2 lakhs for 7 lakh people to 3,75,000. This is a bracket where if your investments tax saving is there, even in that case, new and old will have no difference for you. But if you have more investment in tax saving, more deductions you can claim beyond this 2 lakh to 3,75,000, go for a old system. This is so simple now after considering all the slabs, all the new system rules, etc. Of course, the rule is not applicable for those who are having income from business and profession, because it is just like once you change and go to the from one system to another, you are allowed to come back once. I give an example. Suppose you go to US, you are granted a visa, you come back and then did some fraud here. The visa may be denied to you. Like that, you can shift from one system to another. If you are having a business income, go there. Okay, you enjoy whatever tax benefit is there. If you wish to come back, yes, you are allowed. But once you come back, you have to stay in the same system where you were. So those who are having income from business or profession, especially those who are on a contracting, they get Form 16A. They are not on a payroll, correct? Even doctors, lawyers, professional like us, we are all we have it's like a return ticket. Go and come back. Once you come back, don't go. So one has to be very careful if he is having an income from business or profession. But other than those, salaried, pensioners, housewives, anyone, for them, switching from one system to another system, every year they can do so. However, remember that now new system will be a default system. That means that a screen in front of you will show you while filing the return a new system. If at all you want to switch or go to the old system, you may have to fill up the form, or there may be a procedure which will allow you to file a return in the old system. And in the next year, you can come back and you can shift the system. Now, who will go for this change, shifting from one system to another? Let us say I'm having a 15 lakhs income. I do not have any investment. I'm a new person having my employment. I want to save, don't want to save right now. Definitely new system will be beneficial. But thereafter, I started retirement planning. I got Ameya, and Ameya said, you start retirement planning, put some amount in PPF. And then I started this investing money. I got my housing loan. I have my education loan, because education loan can be for you, your spouse, your children. So I can have my own education loan. Where I find that crossing of that 375 limit, I can shift to the old system. So all of you will remember that as far as this choice between two systems, your present deductions and your income level, these are two factors. Income level, as I told you, between 7 to 15 is relevant, because 7 lakh, 2 lakh is that break even, 10 lakhs, 2,50,000 is the break even, and for 15 lakh, the break even is 3,75,000, and above 15 lakh, break even is the same, 3,75,000. Amount of deductions you are claiming or you are likely to claim during that year, during of course next year, because the provision will start from April 23 onwards. So you have to decide accordingly. Question can come in somebody's mind: when should I take a decision? Right now, or when at the time of filing of return? Of course, the law allows you to take a decision at the time of filing of return. Just before filing return, you take a decision and accordingly you file. But I would say you already have your income for last few years, your deductions for last few years, including current year, because current year, March 23, you will be definitely, the new provisions are not applicable. So old system is still attractive, as I told you in the initial discussion. So for the current year also, you may choose the old system because that revised new system as per budget will applicable only from 23-24. So even from the current year's understanding, you can very well in April take a decision what will happen in the 23-24. Will my deductions will be more than what the limits which I have given you? If that is so, remain in the same system, old system. Otherwise, new system will be definitely beneficial to you. So this is one aspect where the lawmakers have made the different change. So with this discussion, I have very in a nutshell, I have some pointers for you. No need to invest for any tax saving at all if at all you are switching to a new system and accepting the tax, what that reduced tax is. Those who are having income up to 7 lakhs, definitely new system is beneficial to them because there is no tax. You get all the benefits. One more angle. This revised new system has given a different angle to the whole tax system. Under old system, the taxpayer was reducing his tax liability by doing something, by going for a home loan, by purchasing a pension plan, putting money in PPF, going for a tuition fee, paying tuition fee, donating money, house rent allowance, paying the rent. So many conditions were attached. Now under new system, since that 375 is the amount which we have found out, no one has to do anything specifically. Of course, he can, as per his need, do all the things, but not for tax purpose. I don't have any housing loan, still I get the benefit of that 2 lakhs indirectly, because if I would have got that benefit, my tax would have been 150, same I am paying in a new system. So new system indirectly has given you all the tax benefits. Of course, 3,75,000, that is what the cutoff point is, without actually investing those 375. In the some interview after the budget, the finance minister said that the question was asked why you did like this. Will this not affect those who are having there will not be incentive or encouragement for saving, because in India we don't have a social security. We have to save on our own, and as rightly said by the Amir, after retirement the income will not be there. So we have to create that corpus right now. Why you have done so? What answer she gave? Probably she said, look, for example, that 15,50,000, the tax is 1,50,000. So by paying that 1,50,000 out of 15,50,000, what per example is, you have 14 lakhs with you. Now this 14 lakhs, you do whatever you want, the way you want. Either you invest it, you spend it, you create your retirement corpus. A tax and the investment are now disconnected with this new regime. That means one has to think from his own good, not from the saving point of view of the tax. And therefore, probably I would say, after this new regime will be successful or more and more people will accept it, they will have to be very careful, especially young generation, that they go to a proper investment or financial planner like NICWealth, get their investment plan, because now they not be investing at all for tax saving. They have to think on their own and start investing as per the plan given by the financial advisor. So more need of a financial advisor. Tax experts are now not required, probably. Because you can file your own return. You have not to have any tax saving. Of course, some business people may require tax experts because some complications are there. But ordinary taxpayer may not require a tax expert because no tax saving is now required. In the sense, tax saving investments are not required. And therefore, one gets the benefit of all tax saving by just accepting a new regime, even though that is not good for encouraging the youth, especially for saving in their earning life to make their retirement happy, to achieve their goals. I think the NICWealth will take care, or financial advisors like NICWealth will take care of their these aspects of their life when the investment is concerned. I think we have finished the major aspect of our discussion. Two more points which I want to actually explain you. They are relating to the budget, but not relating to the old or new regime. But before that, I request Alvina to go for a poll. I request Alvina to start the poll. Are you investing for tax saving every year? Five more seconds and then we'll stop. One more question also is there. Alvina, you can go for a next. How many of you have remitted money abroad in last 3 years? For education, for any purpose, for foreign tour packages. You can close the poll. What is the poll result? I am just not getting it. Alvina, can you
Alvina, you'll have to post the, yeah.
I am not, I cannot view it. Amir, can you just
read
out?
So 77% people have said no, they have not remitted money, and 23% people are saying yes, they have remitted money. That is the answer for the second.
And tax saving
Alvina, can you show the first question's poll result?
I cannot view it here. Just Amir, help me.
Yeah. Alvina, even it flashed and it went off. So can you So 84% are saying for the first question that they are doing tax saving 84%, and 16% people are saying they are not investing for tax saving.
So that means your first question itself indicates that almost 84%, almost everyone is in a mood to save for tax. To save the tax. Of course, now they will have to see how much they are saving for last so many years and including next year, and accordingly decide the regime which would be beneficial to them. As I told you, income level and the tax saving amount between 2 lakhs to 3,75,000 will give them the real answer as to which regime they should choose. That was one aspect. Why that second poll was required? Because there is a major change as far as remittance abroad is concerned. There was a TCS, tax collection at source, provision applicable for any remittance above 7 lakh rupees till 2000 March 23. So if I am remitting, say, 8 lakhs rupees, 5% of the amount of 8 lakhs, for example, in my example, will be taken from me by the bank, and that was treated as a tax collection at source. That amount will be deposited to the government on my behalf as my tax payment. Of course, when I file my return, I can get the credit of that amount. It's like an advance tax. In the budget, what is very important, what the change is that accepting education and medical treatment, where the limit will be still, where there is no change, 5% TCS will be applicable. For any other amount, any other purpose, if the amount is remitted abroad without any limit, 20% TCS will be applicable. That means suppose I'm having my remittance of 1 lakh rupees. I should be ready with 1,20,000. 1 lakh will reach to the person to whom I want to remit, and 20,000 my bank will take from my bank account and deposit on my behalf in my government in my PAN number. So I can view that on my 26 days, that 20,000 tax which I have paid. Can I adjust that tax 20,000 against my tax liability? Yes, it's just like an advance tax. I can adjust it. I can claim a refund also. But the point is that 20%. So suppose, let us say my foreign trip is now, for example, 10 lakhs I'm paying and remitting there, or I'm buying some assets abroad. I'm buying shares or any gift which I'm giving to my relatives abroad. Any amount remitted abroad other than for education and of course for medical treatment will attract 20% of TCS, and that's a huge amount. I would say suppose my expenditure is 10 lakhs, 2 lakhs rupees will be blocked as a tax. Of course, as I told you, this tax amount is only advance tax. I can claim that back, or I can adjust it my other tax liability during the year. But let us say, suppose I am remitting in April 23. Of course, the provision will applicable from July 2023. But let us say July 23, I remit the amount. My return filing will be July 24, and I'm getting the refund. Even if the refund is now available within say 15 days or 1 month, sometimes it is within a week also. Entire year my money will be blocked. So ideally, when you remit the money now for a purpose other than education or a medical treatment, you have to be careful. You have to keep your more money ready so that it will be treated as a tax paid to the government. Accordingly, you can adjust your advance tax. Those who are paying liable for advance tax, you can adjust your advance tax. The problem will come with for the senior citizens, because they are not liable to pay advance tax if they don't have a business income. And therefore, in such case, if a senior citizen sends money abroad as a gift to his son, definitely 20% will be blocked for 1 year. He will have to file his return and claim that as a refund, or he can adjust that against the tax. So that was one more thing. One more element before we go for question answer is about the changes as far as the insurance is concerned. Most of you may be aware that henceforth, from 1st April 23 onwards, any policy or policies where the premium is exceeding 5 lakhs rupees, when you get back the amount of that insurance, it will be taxable. So your premium can be up to 5 lakhs with effect from 1st April 23 for one policy or policies taken together. So let us say, suppose I got 3 policies, 2 lakhs each. Will that money, what I will get from the policy will be taxable? Yes, because 2 lakhs each into 3. That means my total policies will be, premium will be 6 lakhs. And therefore, higher amount policies where the premium is higher have become taxable. This is a major change in the budget. The reason given by the finance ministry is that the insurance is primarily for the purpose of insuring one's life, but it was being treated by some higher net worth individuals to take as an investment avenue, and the returns were tax free in earlier days before 1st April, and therefore government wanted, again, here is also there is a disconnect. They say investment you can make separate investment, pay tax on the returns as per the investment type, but if you are combining your investment and insurance and the amount exceed 5 lakhs premium, that must be a big policy must be taking, where the life policy, the life premium is 5 lakhs. Then you should be ready to pay tax when the policy amount mature. 2 elements are there in this particular provision. That first of all, suppose the policy holder dies and the legal heir or nominee gets the amount, it will be tax free. So at least that big relief is given. So in the case of death of the policy holder, the amount received by nominee will be tax free. No tax will be levied. Number one. Number two, if the policy holder himself gets survival benefit of such policy, then whatever premium he has paid, that will be allowed to be deducted. So suppose he gets 50 lakhs rupees and he has paid a premium of 35 lakhs. So that 35 will be allowed to be deducted. The reason they say the condition for that is that this premium paid should not have been taken as a deduction. Of course, if he is in a new regime, he is not entitled for any deductions. So he may not be taking any deductions. But if you have claimed the deduction under Section 80C, that much premium will not be allowed to be deducted while calculating your taxable income. So if you get a 50 lakhs and 35 lakhs entirely, if you would have claimed, of course, it is not possible because maximum 1,50,000 is allowed. So whatever is already claimed as a deduction, that will not be allowed to be deducted. Balance amount of premium will be allowed to be deducted. Indirectly, suppose you don't claim a deduction and pay a premium of say 35 lakhs and in turn get 50 lakhs up to maturity, 15 lakhs that will be taxable. Till 31st March 2023, this amount is tax free, irrespective of what is the premium amount is. But now a cap of 5 lakhs or above in aggregate in total for all premium paid by you is there now, and therefore the maturity amount will be taxable. So if at all, I would suggest those high net worth individuals that if at all they want to go for this scheme, 31st March 2023 is a time limit for them. They can go for these policies, pay an amount more than 5 lakhs. Such policies will not be included as far as taxation is concerned. They may be paying more amounts in future, but at least original policy taken before 31st March 23, that will not be covering under this new taxation change. And therefore, one can think of it. I think Nike Wealth also has an insurance company. You can be in contact with them, and such policies can be bought, because this is the last chance for you to go for such policies which are tax free. So these two more aspects I wanted to convey to you, apart from old regime and new regime. Of course, there can be a questions. I can answer all those questions. Thank you very much, all of you, for patiently listening. Amen. Alvina.
Thank you, Gokhale sir, for the insightful session. Thank you, sir, for the insightful session. My takeaways from your session were, first of all, the explanation of the new remittance law. And the second one, the fact that the maturity proceeds of the LIC policy having a premium exceeding rupees 5 lakhs will now be taxable. So thank you for the insights, sir. Now it's time for the question and answers. And I invite my colleague, Mr. Ninad Monkar, to take over and moderate the session.
Thank you, Diksha. Thank you so much. What we have done is that at the time of registrations, when you fill the forms, we had requested you, if you had any questions for Ameya or for Gokhale sir, to share across those questions at the time of registrations. So what we have done is that we have collated these questions, and I am going to take liberty to ask a few questions from these registrations, and I'm going to do it with Ameya as well as with Gokhale sir. Right. So my first question is for Ameya. Ameya, this question comes from Mr. Abhijit Puranik. He is asking, I have 7 years for retirement, and are pension plans better or mutual funds? Right. So over to you.
Yeah, thank you. See, I'll tell you very honestly that, if you're going for pension through NPS, I would say it's definitely advisable. But in totality, if you look at any annuity which comes to you, and Gokhale sir over here is actually a right person to comment on that, that pension is taxable. Whereas, of course, in case of mutual fund, when you're opting to generate an income after your retirement through mutual fund, of course, that is also taxable, but that is taxable as per the capital gain only 10% as it stands today. So my suggestion would be you can do combination of both. But in terms of pension plan versus mutual fund, there is one more very important aspect that changes, is that when you opt income from a mutual fund scheme, your principal is still growing after withdrawal also, which doesn't happen for a pension scheme. So it is better to have more proportion or higher allocation towards income generation post your retirement through mutual fund rather than pension schemes.
Sure. Thanks, Amey. Gokhale sir, this question is for you. This question comes from Ms. Preeti and from Mr. Prakash Shirodkar. They want to know, in the new budget, was there anything that the Honorable Finance Minister put across for the senior citizens per se?
No, not at all. Very frankly, as far as taxation is concerned, she talked only on a new regime, and that too allowed only standard deduction, which was not earlier allowed. And she changed the slabs, which are now more attractive and comparable to the old regime also and the earlier new regime also. Nothing more for senior citizens. Very interestingly, the new regime also is not making any differentiation between a senior citizen, super senior citizen, or a non-senior citizen. All are alike. Because otherwise, old regime, we had a different tax slabs. For senior citizen, higher slab was there of 3 lakhs. Now she said 3 lakhs is the basic slab. Up to 3 lakhs, there is no income under new regime. Super senior citizen concept is totally absent in a new regime. That person having 80 years and above, up to 5 lakhs rupees, he was not supposed to pay any tax in the old regime. She said, I already added that 7 lakhs, that is 2 more lakhs for everyone. So senior citizen, no change, nothing. Of course, as I told you, senior citizens normally they can put money in a tax saving deposit up to 1,50,000. Generally, they may have a medical insurance of 25,000. For them, it is a higher deduction of 50,000. So 2 lakhs. They can continue with their NPS after 60 years till 70 years. So they can put another 50,000, 250. Normally, they don't have this housing loan at that age. So 250 is what they normally they can save. Plus they get section 80 PTB benefit, that is 50,000, standard deduction 50,000. So maximum, if you count the deductions are 350, and that is much lesser than the 375 break even. So for a senior citizen, as far as the coming year is concerned, new system will save senior citizen tax without doing anything, without putting money anywhere. But as his question are whether anything done in the budget for senior citizen, of course nothing, no tax concession, nothing new scheme. One investment avenue, I think, even though it is not relating to tax, senior citizen saving scheme, which was available to the senior citizen, 15 lakh was the limit. It is now increased to 30 lakhs. So they have now more scope to invest and get the steady income, but that is not relating to taxation. But of course, it's an investment opportunity created by in the budget, and therefore one can take the benefit after April 23 about the new change.
Great. Thank you so much, Sanjeev sir. I have a follow-up question, and this comes from Mr. Mohan Joshi, and I would like Sanjeev sir to answer this. He wants to know if a senior citizen is having an income which is less than rupees 3 lakhs, is there a need to file the returns? There is no TDS that is taking place, but income less than 3 lakh rupees, he's a senior citizen. This question is coming from Mr. Mohan Joshi. Is there a need to file income?
No. The old regime, the law was very simple that if you have an income below that taxable limit, as far as senior citizen is concerned, 3 lakh under old regime was a tax-free income, that is tax exemption was there. And there was no need to file the return as far as the old regime is concerned. Hello?
Yeah. Yes, sir.
Audible?
Yeah.
Under new regime, the first slab itself is now 3 lakhs. So even if he is having income of 3 lakhs, filing of tax return will not be mandatory for him. But of course, he can file the return just for visa purpose. Of course, bank loan, he may not be requiring that. But legally, he is not supposed to file the return. But nowadays, typically, if you have made large investment, the annual information statement is reflected in your website. And then the department sometimes want to know that why you are not filed the return. And therefore, there may be a query from the department. And in that case, you have to give a response to the department that my income is below taxable. Don't be afraid that when some query come to you, and you don't say that Gokhale sir ne to bola tha tax return mat file karo aur mujhe income tax question aa gaya. No, getting question is now very easy for a department also, because SMS is available, mails are available, your mobile phones are there. So you may get a question from department, answer that you don't have income liable to tax. Don't worry at that time. Otherwise, senior citizen, they worry, they come to my office running likiye sir ye dekho mujhe notice aa gaya. Bola kya notice hai? They're just asking why you are not filed the return. And the answer has to be given online. Submit your response. I don't have a taxable income. Even that drop down also answers are provided. You have to select and say yes. Once you select the yes, and if you are a senior citizen, normally no question will come back again. Unless you have invested crores of rupees, question can come from the department. If you have a crores of it in investment, from where, how can you say that your income is 3 lakhs? You will have to then prove that how your income is 3 lakhs or less. But otherwise, legally not required. Not required to file the return.
Sure. Thank you, Sanjeev sir. The next question, Amey, I would like to ask you to answer these questions. Now, what I've done is that I've combined a couple of questions. These questions come from Mr. Sharon Thomas and Vijay Kumar Khamitkar. Now, both of them would like to know, how do I start planning for my retirement, and when should I start retirement planning?
So how should you start for retirement is a very broad question, but I'll just try to put in some principles over there that see, starting for retirement, you need to have asset allocation. And for that asset allocation, the most important thing, what you have to keep in mind is the inflation. Because today, if say, I'll just select 3 buckets, that if somebody is a young individual, when I'm saying young, predominantly a 25 to a 40 kind of, or 35 kind of age group, this person can have higher allocation to the equity portion. Subsequently, as your age progresses, you can have slightly lower allocation towards the equity, but you should have that much exposure towards equity, which will consistently be able to beat the inflation. So retirement planning is something which you have to have equity portion. There are many people who say that, no, I don't want to take a risk of equity. We don't have option. To be very honest, we'll have to have an equity in our retirement planning. The second question, Ninad, was when should I start, right?
Correct.
Yeah. So see, the earlier you start is the best thing. I would tell you very honestly is that the moment you start earning, the first thing, and if I showed in my presentation this budget rule also. If you stick to that budget rule, rather at that time you have least amount of responsibilities when you start earning. So at that time, probably in budget rule, it mentions that 20% of your total income should go for retirement. But at that time, if you are not taking care of household expenses because your father, your mother, parents are taking care of that household expenses, probably at that time you can save 30 to 40, even 50% of your income into retirement. The early you start, it is safe and it is very easily achievable. We don't have to, stress about it. It can easily happen. So earlier you start is the best thing. I mean, that's the shortest answer which I can give.
So just to add to what you just spoke about, and I'm taking a cue from your presentation, the roots get stronger, I believe, by starting early, right?
Yeah. I mean, like the earlier you start, maybe the stronger will be the roots.
Correct.
To put it in the rhyme.
And you just now spoke about inflation and the importance of inflation. There is a question that is there from Mr. Ajit Pindarkar. He wants to know, and this is a very interesting question, and I want to take it to you. How can a retired person beat inflation without investing in equities?
So see, as I mentioned, as far as my experience goes, rather there are many experts all over the world, not only in India I'm talking to, they all say that equity is must for all of us. With that thought, I will tell you that, what he's saying is not impossible also. But then what you will have to do is that you will have to reduce your expenditure drastically. Because see, if you see predominantly our forefathers, then they have done retirement. We all could do our education. That means they could do retirement planning. There is no doubt about it. But I have seen many cases where, parents have sacrificed a lot of things for kids when they don't invest in equity. And all these things happen very smoothly when you have a good asset allocation. I'm not saying 100% into equity, but have a sizable amount in equity, which will help you beat the inflation. That is good enough. And just connecting to our previous question, the earlier you start, you can easily reduce this equity exposure as you start touching 40, 45, 50. So then if you want to reduce the risk, you can definitely do it. But why to compromise in this one life? And that's the reason I would say equity is must. With a proper advisor, he will mitigate the overall risk on your portfolio.
Amir, can I add?
Yeah, please. I was
please,
just
sir.
about to say, Sanjeev sir, please, if you can.
See, I have a client who has 20 properties and getting rent of the 20 properties. All this rent goes to his bank FDs, no equity, nothing. He's much happy, he's retired. So earn so much amount during your lifetime, save that in FDs. It will be sufficient for at least your next 3-4 generations. But what the problem is that amount will depreciate because of the inflation. So suppose I have 50 crore rupees, that will be sufficient for me at least for my next 3 generations. But of course, that 50 crore value over a period of say next 100 years will not be 50 crore. It will go down substantially. Yeah. And therefore, beating inflation is required not only for you, but even for your subsequent generations also, so that you accumulate your wealth in such a manner that your wealth is more than the depreciation in the rupee. And that is how either earn bigger amount, put everything in non-equity, well, that will be sufficient for your life. But if you want to pass on the property wealth to your next generation, always think of beating equity. And I think why Ajit sir would have asked, because of the falling market, he would have asked, this is the best time to invest now. There is a sale in the market, invest. Probably you will be happy to get the good shares at a very low price. And therefore, that can be a good retirement planning now, even now also. Thank you.
Absolutely, sir. Thank you, sir. Thank you.
Thank you. Sanjeev sir, there is this question that has come from Mr. Atul Deshpande. He wants to know, in the new tax regime, were there any provisions that was mentioned about LTA and LTC? Any idea about that?
No, nothing. Almost 70 deductions have been removed as far as if you go for a new tax regime. So except that standard deduction is now reintroduced, but otherwise everything what normally we used to claim as a deduction under old regime, all section 80 deductions, house rent allowance, HRA, LTA, leave travel, concession, everything is gone. So only one deduction is permissible, that is standard deduction. That too, of course, from 1st April 23 onwards, and employer contribution to NPS, that is under section 80 CCD2, that will be allowed as a deduction under new regime. But except these two, and of course the family pension for those who are getting family pension, standard deduction also is extended to them under section 57. So otherwise no deduction is available. LTA, LTC, nothing is available in the new regime, and therefore one has to think. That's why I said you have to think from this angle, that if I remain in the old regime, how much I will be saving, and if that amount exceeding that 375, that break-even point, then it is better to not to accept new regime, but choose an old regime and continue with the old regime. That is what I said in my earlier speech.
Sure. Sir, Rekha Gholkar wants to know, and she had put this question in the chat box, where is it advisable to repay the home loans?
Yes, definitely. The home loan was basically attractive because of the interest deduction, 24B section interest deduction, which taxpayer used to get. In addition to that, section 80C, the principal amount repaid also was allowed as a deduction up to that 1,50,000 limit. So the attraction for home loan was not only buy a house, because otherwise individual may not be possible to generate so much of the amount. So getting the loan, of course, was because of the need of money. But I have seen that my clients, even though they had their own money, they were going for home loan. I think the best example is Sachin Tendulkar. We heard the news that he also had gone for home loan, and some news flashed in those days. So the attraction beyond for going for home loan was this tax benefit. Now, if we are going for this new regime where no deduction is allowed, and still we find our tax liability is lesser, then the home loan, if you have a sufficient money, then you can repay the home loan. Of course, this is again a financial advisor will tell you, can that money which you have be deployed in such a manner to generate more income rather than the interest what you are paying to the bank for the home loan? If that is possible, like Ameya said, if you are getting good income from mutual fund and the equity, say maybe 12, 13, 14%, and because the home loan interests are much lower, still you can manage to continue with the home loan and getting that benefit of additional income created by not repaying the loan. So that again a choice of financial calculation. But from tax angle, the additional tax benefit, it was a bonus, that is almost now gone because of the new regime. Of course, as I said, by calculating, if you still can see that your tax saved is more in the old regime, you can continue with the old regime because option is given to you. But definitely, because of the new regime and the attractive new regime, probably the home loan attraction from tax point of view is no more.
Sure. Sir, I would like you to address this question regarding the remittance limit that you just spoke about in the new tax regime. And this question comes from Mr. Manoj Kulkarni. He wants to know, is tax levied for remittance above any specific limit? I am paying for my son's living expense during his education abroad. This I am transferring using bank transfer and I'm sending it as a gift.
Yes. That's the big problem. That's why I took this, even though our main discussion was on old and new regime, I deliberately took this topic for discussion because now from July onward, this is the question. Because only education and medical treatment are exclusions from this new tax, that additional TCS. Now, question is, what is education? Probably the department is of the view that what you pay to the university for the term fee and all that, only that should be counted. Probably some clarification may be required, and department may come out with the circular in a coming days, that will that amount given to the son for their living expenses as a gift, will that be counted? If, of course, he is there for education. He is there already for education. Already his fees are paid. but father is transferring the amount for not for the fee, but for living expenses. Will that be added as a education? That clarification may come. As of today, education means only the amount given as a fee. And if that is not so, without any limit, 20% TCS will be applicable. As I told you, this tax will be refunded to you after filing the return, but the money is blocked and higher amounts will be unnecessarily going to the tax authorities. Of course, you can adjust that against your liability. If you are already liable to pay tax as an advance tax or subsequent tax, you can say that I need not pay that tax, advance tax, because I am already 20%. TCS is already with the government. You can always adjust. But those who are not liable to pay tax, some retired, some senior citizen, for them this is definitely an unnecessary hardship that money will be blocked. Otherwise, there can be some system whereby, like in bank 15H 15G form we submit, whereby we declare that my income is not taxable. So similar such some procedure should be introduced by the finance ministry, where you can tell to the bank that my income is not taxable. This 20% will be unnecessary hardship to me, so don't deduct it. That type of some procedure should come. Probably some people, some authorities may give suggestion to the finance ministry, and that's why the provision will come after July. So during the passage of the budget, some relaxation may be given. But otherwise, what his question is, definitely it's a hardship to the ordinary person. The tax will be unnecessarily deducted and recoverable only on the filing of return.
Thank you, Sanjeev sir, for the detailed explanation. Thank you so much. I'm sure Manoj has thanked you in the chat box sent to us, that he has thanked you heartedly for giving us such a detailed answer. My question now is to Ameya. Ameya, Mugdha Patkar wants to know how much corpus should one accumulate for retirement, and I just have 7 years to retire.
The first of all, let me tell you is that, the calculation, what easily all of you can do is that 7 into 12, simple, that how many months are remaining. So please do that calculation in my circle of life, the slide I was showing it to you. Now, coming back to your question, Mugdha ma'am, the most important thing, what you have to remember over here is that, can you just exactly repeat the question? I mean, I was just thinking of some other start over here.
How much corpus should one accumulate for retirement?
Yeah, got it. So see, there are, multiple ways of calculating how much corpus is required. In our tools, we have a mechanism where we ask you what are your current expenses. We equate these current expenses at inflation and will tell you that what corpus is required at the time of retirement, that is 7 years down the line. But if I have to give you a thumb rule, which is like easily calculable or, can be calculated by any of you, it should be 30 times of your annual expenses. And we had done one session actually with Karan Datta, one of our speaker over there, and he himself has done that. He opted for early retirement over there. So if you calculate your current expenses, let's for simplify it, 1 lakh rupees per month into 12 lakh rupees expenses into 30 times, multiply by 30 should be the corpus you require for your retirement. That's the easiest way. Of course, again, that's not, can't be an accurate answer because, as per your situation, the kind of lifestyle you want to live, this answer will differ. Please get in touch with our growth managers. They have a detailed calculator where we can actually take into account that what is the, if any liability is there a liability which might continue post your retirement, unfortunately. All these things will actually give the, will change the answer. But thumb rule, always you can remember 30 times of your annual expenses.
Lovely. Thank you so much, Amay. The next question that I would like to ask is for Sanjeev sir. This question comes from Mr. Dharmendra Panchal. He wants to know, is there any specific advantage for people earning more than rupees 50 lakhs? I believe he is talking about the new tax regime. Are there any specific 50 yeah.
No, nothing. No. On the contrary, the surcharge will be applicable of 10% on the tax amount. So for them, the tax rate will not be 30%. It will be 33% plus education cess. So for those who are having more than 50 lakhs income, nothing in the budget as such. no benefit. They will have to pay tax. Of course, they have a choice of choosing between the old and new, as what we discussed. And what is beneficial to the such taxpayer, he can choose. But no specific benefit for a person earning more than 50 lakhs. Rather, surcharge will be applicable, so more tax will have to pay. Otherwise, no such benefit.
Sir, Mr. Manoj Kulkarni wants to know, as a senior citizen, that is, he is 75 years above, are there any different avenues for tax savings? If you can just give a broad overview of the various avenues available for senior citizens above 75 years to save tax.
As I told you, the tax saving only is possible now only under old regime, first of all, as far as taxation is concerned. And under old regime, we have various deductions, exemptions available. Even that will continue, like Section 80C of 1,50,000, Section 80D for senior citizen 50,000. NPS, if they are not crossing, for above 75, it is not possible for them to continue with the NPS. They may not have a housing loan. I would say for a person above 75 lakhs, he can think of a tax-free bonds rather, where the yield is similar to the bank yield, but the income is totally tax-free. Earlier, dividend was a good type of investment, no, where dividend yield, if it is a good dividend yield, those who are having shares in their portfolio quite long time, dividend was handsome, and therefore it was tax-free. As far as individual is concerned, company used to pay dividend distribution tax, so that was a good avenue. But nowadays, no. Otherwise, there is one plan which I think Amir just talked of it, is about putting money in a mutual fund in such a manner that you don't get income, but you withdraw your principal or withdraw your NAV, known as systematic withdrawal plan. If you entirely depend on the systematic withdrawal plan, you can get in touch with the NICOE team for this, how they actually work. But systematic withdrawal plan, you accumulate what is accumulated by you over a period of time, you withdraw every month. So there is no such income like interest. It is a combination of the interest and principal if you withdraw, and whereby you save a tax substantially, because the tax will be a capital gain tax. Even though in the equity up to 1 lakh rupees there is no tax, exemption is there. Even that will continue, and for the remaining amount only 10% tax is applicable. So one can think from the point of view of a tax saving by putting money in such a manner that he goes for a systematic withdrawal plan rather than depending upon the bank interest and conventional methods. Of course, going for this now it will be difficult, because if already you are 75 and above, you have putting money in mutual fund now at this age may not be advisable. But those who are planning of retirement, who are not at 75, they can think of this good avenue where they accumulate the money over a period of time. By the time they are 70 or 75, they start withdrawing the amount as their source of income, and which will have a much lesser tax as compared to the conventional avenues like interest and all other things. That is what I can say.
Yeah, can I add just one small thing?
Sure.
Sanjeev sir, your aspect is absolutely right. Like for 75-year-old also, I'll just tell you that these days we have a lot of combination of equity debt kind of schemes where the taxation is of equity, but you don't end up investing 100% into equity. So please don't hesitate. Even if you are 70, 75, we still have a very, very conservative options for you, which will still give you at least 1 or 2% better returns post-tax compared to your FDs. And then you will not be taking the 100% market risk. So those options are available. You can get in touch with us. Some portion can definitely go into that. We will never tell you that redeem everything and put it over there, but some portion you can take and export.
Sure. My last question, and I want to park this question to Ameya. This question comes from Mr. Mohan Joshi. He wants to know how much percentage of total corpus of an individual needs to be set aside in the savings account as emergency funds.
So contingency planning is one of the most important aspect in financial planning. So, just to tell everybody is that, that is the first thing which we check when we start the financial planning. So typically, again, there is a thumb rule which I will tell you that it has to be a 6 to 9 months kind of your income should be kept aside in a contingency fund. For a retired individual, it might be slightly more. If somebody is into a job where the job, I mean, in the sense, they might risk of losing a job, they feel that, unfortunately, if that situation is there, they can keep as high as 10 months or 12 months of salary also aside. But typical contingency fund should have anywhere between 6 to 9 months of money left. And that money, please park it into FD, in liquid funds, anything where we don't have to. Returns is not a prerogative over there. Safety is the paramount.
My last question now to Sanjeev sir. This question comes from Mr. Vivek Fadke. He's asking the question: any changes in the tax on capital gains in new regime?
No. Fortunately, there is no change as far as taxation in the capital gain is concerned, except that the taxation as far as capital gain out of the residential property and assets where a person was investing money in another residential house and claiming an exemption under section 54, or if you sell some other asset other than residential house like commercial property, gold, and putting money in a residential house, you used to get the benefit of section 54F and the tax exemption could be claimed. There, in this budget, we find there is a cap of 10 crore. So if my gain is say 12 crore, earlier I could easily buy a house, one house of 12 crore, a big bungalow, and then save entire 12 crore. But now with the budget, they say you can save up to 10 crore only. The remaining 2 crore capital gain will be liable for tax. Of course, this may not be affecting directly all of us, very frankly speaking, but Sonam Kapoor recently sold her flat for 32 crores. I don't know what was her cost of acquisition, but she may be affected. She would have affected if this was sold after 31st March, because she could not have, even though she buy a new house of 32 crore or even lesser than that, maximum she could save tax up to 10 crore. Beyond that, she will be liable to pay tax. So this is the only change. Otherwise, share, mutual fund, no change, nothing. Everything is kept as such, and that is a big good thing in the budget. Market appreciated that. No fear as far as that aspect is concerned.
Sanjeev sir, I think so. The startup owners were using that route. What they saw, that they used to sell their startup company, because that was tax free at that time, and that entire tax free income was going into buying of a residential property worth 10 crore, 20 crore, 30 crores, and they used to exempt 100%. Sir, quick one question from my end, or rather for all our viewers, is for the highest slab, they have reduced the tax rate. If you can throw light on that.
Sure, because that is what many people ask me question, that what was the need for giving relief to those who are having highest slab, that is 42.5% income earner more than 5 crore. Why to give relief to them? Nothing was for us. See, the whole concept, I think finance minister answered the question after the budget in the television interview. And even we agree. Those who are earning 5 crore and above, they are productive people. Earning 5 crore is not an easy job. So definitely they are contributing much more out of that 5 crore to the government in the form of a taxation. And therefore, even I remember my few clients earning 5 crore and above, 42.5 something is very pinching tax. No, nobody likes to pay so much of the tax. And therefore, they were of the opinion that, okay, we are ready to pay tax, but this rate is quite high. Internationally also, if you find the rates of 40% and lesser are accepted rates. So finance minister said in the interview the same thing, that I have reduced that rate, not a great, but from 42.5 to 39%. Some relief to those people, number one. Number two, what we have analyzed is that many, because of this high rate, shifted to Singapore and Dubai and other countries and started earning there. So that was again not good from point of view of a taxation as far as the income. Otherwise, what would have available to the government of India is not available. That is the second point. Third point, when you have lesser taxes, compliance increases, and that is what we have seen for last 30 years of my practice. People are happy with paying tax now. Earlier, I remember people were asking me to determine the tax amount and accordingly prepare their return. Of course, not salaried people, but business people. Now they are reasonable reasonably gone up, they are ready to pay that much tax. As just now we were discussing, 15 lakhs of income will have 10% of tax, 1,50,000. So it may be better for me to pay 10% and balance 90% is available to me. So now people are ready to pay tax over the last so many years since the tax rates have gone down. But for individuals, especially 5 crore and above, this was not done. I think to some extent some relief was given. Again, one more point, that companies and now cooperative societies and new companies are having a lesser tax of 25% and now 15%. So that was the benefit was not given to individuals who are earning good amount. And that's why even reduction in the tax is welcome step. At least we chartered accountants welcome that, because that is a good thing to happen, that if you reduce the tax, compliance will go up. And the people who are actually earning the money in that manner, they will be encouraged to continue to earn bigger amounts and ready to pay a reasonable tax. So that reasonability is more important rather than the tax collection, I would say.
Thank you, Sanjeev sir. Thank you, Ameya, for the lovely discussion and sharing across your thoughts open-heartedly with everyone. Over to you, Diksha, to take it forward from here.
Thank you. First of all, a very humble thank you to both the speakers, CA Sanjeev Gokhale sir and Ameya Godse, for taking out their time and sharing their learnings with us. Also, I would like to thank Mr. Ninad Monkar for moderating the question and answer session. I would like to thank all the participants for taking out their time to join us here on a weekend. And we hope we were able to add value to all of you. And last but not least, I would like to thank the AD Nayak Group team for making this webinar a success. Thank you, everybody. Signing off now and take care.
Thank you.
Thank you. Thank you, everyone. Have a great weekend. Enjoy. Thank you. Thank you, Mohan sir.